Hello traders, this is Alex with the StockMatrix program. We had no trades Friday. I think we only had a couple the previous week. Again, the trends are continuing, which is good, right? Now, again, when we started this program on a date picked out at random, I think it was a full moon or something. January 6th is when we started. It happened to be the low ebb of all these markets, or actually it was the high ebb of some of the markets as well. So again, we had to go with the trend at the time. So we're just now profitable. The last two trades we took off were profitable. So as you can see down here, these are the last two trades. Let me see. Yeah, the last two trades are profitable. The rest were losses. So, but again, but it hasn't gotten out of. Again, it holding with the trend, right? So a lot of these have some decent profits in it. The more volatile ones, like Tesla, of course, it's got puts on. So, and again, the trends continue. Now, it had a really bad trading day Friday morning. Again, this is Saturday, March 1st, actually. So it had a very bad trading day on Friday, but then kind of closed, I guess you call it mid-range or on the high side of the day. So again, this kind of closed out this moon period. Now, the next moon period is the solar or lunar eclipse. Again, yeah, I pulled up my moon page here that I use. Again, March 6th is the quarter moon, which will be our next time period that ends. So we just we're on the new moon, and the next full moon will be the lunar eclipse, right? So again, we're getting into that turbulent phase of these markets. So, and again, the next solar doesn't come in effect until September, actually on the equinox, which will be kind of interesting. And we're close to in between the equinox here, so the quarter moon between will be kind of interesting as well. But again, I trade these. I know it gets volatile during the solar and lunar eclipse. I can almost guarantee it. I use the political term almost, right? Because again, you can't guarantee anything, but almost a guarantee that it's going to get wild. A lot of your wars are created on the new moon, or started on the new moon because of the total darkness. I mean, there's precedence, right? And of course, we have the highest atmospheric tides on the full moon, and oceanic tides as well, right? That's your highest tides, and your lowest tides is on the solar eclipse and the new moon. And again, that's a pretty seasonal event that I can forecast way out into the future. So again, be prepared. It's going to get a little rocky as we approach. And again, these options can help you quite a bit that we're trading. All right, let's go back to the main. We do have some annuals coming in on Coke, and it's also going to be around 180 degrees or 180 days on the GAN stuff. So we have annuals and a 180 degrees from the high, or 180 days. Now Microsoft has one as well. Lin is 135 degrees over here on Saturday, so Friday, Monday effectiveness. And IBM, which I'm going to talk about in a trade format here on some out of the money options. Anyway, March 1st high of 182.50 back in 2017 annual. Now we have one other GAN notable, and that is Cintas is 190 is the time, so that'll come into effect Monday, I believe. And we're coming into another one, 8:55. It isn't quite, be like Tuesday or something. So, but that's for Google. Again, these are since basically the COVID lows, and none of them have taken that out. But we're starting to get long in the tooth on some of these off the highs. Of course, Coinbase never did make a new high after it opened. But yeah, Adobe 394 days. Wow. Anyway, we're on the March 6th quarter moon prior to the lunar eclipse. Pretty interesting. And we'll look at maybe some of the history on that on the IBM thing I'm going to show you. Let's go to the trade sheet. No trades, of course. We've been in Lin for 46 days. Again, January 6th was our start date, so at least we're now in that mode. Again, 45, the GAN number 45 that I use, we got 1, 2, 3, 4 of them that we've been in that position now for 45 days. Cintas is up, BK up, ED up, and Lin up. So again, we sold it right at January 6th and spun out with a loss on each one of these. So because it's just how it was. Let's go to the let's look at the daily charts. I'll run through them all since there was no new trades. I won't go through my StockMatrix charts today, but I do want to have enough time to go through a trade that I'll show you how I trade out of the money options. But first, let's go through these charts. Here's NVIDIA. You can see that the market is, again, it's just a sloppy thing. So I don't see much happening here. In here, we had this annual that came in, and it was a outside day. So again, if we ever get back above that, is pretty important, right? I think to me, and I think to the market. Again, this is just it's a deep correction, really, but it's a sloppy thing, and that's the tendency, right? You can see the same thing here. Well, let's just run a quick little trend line. I'm going to go off the time frame and the price. Let's run it out into the future. So if we have an exact points break and time and price, will be around March 27th at 103.10, we'll call it. So that's kind of the area that it would forecast. Now, of course, it could come like this one came in before, but the time came in here in the secondary event. So it's possible that could happen. Let's go on. Meta, similar kind of deal. But again, if you notice, keep an eye on, every one of these had a high a while ago, right? Amazon was the closest, or Meta was the closest one, and it just had a poke high. I mean, broke trend. Obviously, the simple trend line got broke, and then kapoof. The support is down here around 6, and then the solar eclipse comes in, which down here. Now, again, we're coming in a new one, so it doesn't have to get down there. But this next, let me hang on just a second. Okay, let's go back and look at the previous solar eclipse. Again, this is the stuff that I do off scenes, but here is our previous solar eclipse back on April 8th, which happened to be this swing high, and it was at a close of 519. And to this solar eclipse close, which was 572, good enough. Again, from solar to solar, again, speed line, right, from time to time. This is the price support based on that. And you can see it hit this high, which is kind of interesting. Kind of a good average, right? So it's definitely possible here by 2 weeks or 3 that we could definitely get down to here. Now, I might go below it and then close on it, right? You don't know the activity. But that's what I do and why I like the solars. They do give you trade opportunity. Let me just see if, no, that ain't a mathematical. It's pretty close, but not quite. So anyway, it definitely gives us down. Again, you can see this speed line, which I think that's what it is. Yeah. Again, this distance and price and time of this correction is just as fast. So now it's a little ahead of the solar. But again, you can see that this line will still be important into the future. And then let me see, March 25th, again, from this solar, right, to this high, one cycle of that put us in here, and it was this little jab low. And then I go to the next, really out to here. So it won't be in play until actually around the lunar eclipse. So let's move on. Sorry, I'm getting long-winded, but I could talk charts all day. This is the Coke, and you can see that the market is, again, this pattern that it's on right here is not bearish, right? This is some type of coil continuation pattern. We had the huge gap. Never did challenge this time period. So again, I guess their spreadsheets were broken. Couldn't figure out why it went on. But anyway, we got we had timing right in here. This is, again, kind of the same thing as I do with the solar, off the highs. If it's gray, that's kind of what I'm doing, off this time period. So that came in on one of those low jabs. So next one doesn't come in until March 27th. So we did have an annular here, and it gapped up after it. So again, all positive signs on Coke. We do have these two timings coming in Monday, the 1982 low and the 2020 low. So it'll be interesting to see what Coke does coming into that. Maybe it's a buy, maybe it's a high, and we have a correction. Maybe run some stops, get a leg down, right? It's almost important to maybe have a little correction here on Coke so that it's not overbought for those people that do that, worry about overbought, oversold. Google, kind of again, another jab down. We had a bull trap, right? Now, if you follow me, you know that these bull traps intrigue me. I trade on them. I do out-of-the-money options on them, which I'll show you here in a second. But again, a pretty much continuational down on Google. Let's go to Microsoft. Same thing. Again, a little older, right? We had this pop here, some secondary event with an island gap down thing. Gapped up, gap down. Just a gap in Marty. I can't figure that out yet. No gap here. What the heck? Quarterly numbers, I guess. How can you? They need to employ an AI to do their spreadsheets, I guess. Anyway, we did have a timing coming in here. Was an outside down day did occur with no follow through. I consider personally, a lot of people think it's the almighty trading. These outside events. I don't agree. I think they're neutral, right? We made a new high and a new low. Now it did close lower, but then closed higher, right? I consider more of these neutral. It's like an inside day. It's no action. A lot of people put too much emphasis on that. and get caught leaning too far in a direction. Now it might still be pointing down, but it might, since it's neutral, it might go out and try to poke it out, right? I don't know. But you got definitely another event going down. Microsoft is one of that older ones, I believe 45 days. Amazon, we ended up here, double top, poof, correction again, broke the support, tried up, and again outside down day. Really no timing in here into the future, but again, definitely still negative. Again, why our system, the StockMatrix program made money, right? Because again, these trends are continuing. It would have been much worse. We'd have made a heck of a lot more money if it closed on its lows. But like Apple, had a pop back. So sideways trade off this resistance. Again, that's based on this right here. Anyway, you can see that we had an annular coming in and we did not take it out. So the opening will be pretty key Monday on Apple. Tesla, again, a poke high and poof, broke the support. Now all these become resistance, right? These annulars. And if we ever get a close above it, which again, we don't have really anything coming in there. Now here's the solar eclipse. Really, that's the next activity. So way out there in a week, 10 to 12 days. Here's Leon. Again, there's the solar eclipse. Again, we've been below it since, right? Now we poked it for 5-6 days above it, and then poof, down we went. Again, one of the older breaks. But really, this whole pattern is either a head and shoulders top, again, unknown, unclarified, unsubstantiated, and then, or this is your nice little break to buy, for people long-term trading, which I don't do, but for people that are, you're talking a nice 15% break that, again, I wouldn't buy that just because it's 15%. I'd make sure you broke something, which we did about it here, broke something here, right? For me, a trend trader, I want to make sure the direction of the trend is in my favor. Here is ED, kind of a similar deal. Again, a bull trap, poof, smash. Again, sideways chopper, too many stops are brewing. The professionals took them out, and down we went. A substantial break. But would we have a bear trap down here? So again, that intrigues me, and one of those that I would have been trading, which I did trade on out-of-money options, buying calls on that bear trap. Here's Adobe, again, sideways action, still bearish, and you can see this is the high. So this is one of the old ones. Again, just a chopper down. IBM, and this is the trade I'm going to talk about. Again, we had this huge gap up, kind of a chopper, challenge the highs, down we went, popped out these lows by a smidge. So we have a bear trap, right, with timing. Again, you can see we had an annular coming in there. I'm going to move on because I'm going to go back to that here in a second. Here's BK. You can see that this market has had a little coil, right, a continuational pattern, just a nice grinder to the upside. I like this market actually. Again, this is an alternative, right? It's a safe play, I think. Bank of Magellan, old bank, old company, been around a long time, since the 80s, I think. So it definitely deserves. Ever since it made new highs, it's been a slow, steady climb. Again, I like these corrections. I get excited about those on these longer-term moves. These are a little trickier. These little shorter ones are a little harder to trade. For me, some people love them. I don't like them. Here's Procter & Gamble. Again, another long-term company. We really haven't done much, though. Once we made new all-time highs, it has so many products, though, that is definitely a true safe play. And, the indexes have fallen, but all these safe trades like BK and PG and have stayed pretty strong. Here's the Diamond JPM. I think it's pretty interesting, right? Again, we fell to the price and time that I marked on the. I think I talked about it in one other video. I think it's when we went short that I put out the video of that trade. But anyway, you can see that this line that we kept in here is ahead of price, kind of like it was here. The secondary event did come in here, but that doesn't mean we can't get above this now and then maybe trade softer, or maybe we're in a faster, more bullish pattern, which can be also. Now, we did have two events. These are really unknown yet. Usually I put one on each side. I'm assuming it's going to go up. We do have quite a few annuals here next week as well. Coinbase, again, poke high, poof. Now, it ain't an all-time high because we had these activity when it first came on and the secondary event. So we're within that range. But you can see the swings are getting wider and faster, which is typical of a new market. Again, a long-term bottom. So I'm looking for a long-term top. For every action, there's an equal and opposite reaction. Here is Cintas, one of the oldest companies, fire and safety, and does laundry for Christ's sake. So, but anyway, you can see that here's the solar eclipse. We got back to it, which also was the gap. So that's a good coincidence that I like. And a 20% break, back up. We're over 50%, closer to 62. So Now again, like I said in the last video, because Cintas just bought it down here. When I put out that video, these are grinders. Typically, my experience in 4 decades of trading tells me these 20% hard smashes or more, and they start grinding up. Once I get to about, I start going, oh man, this is a pattern I've seen before, and it is. They'll just keep grinding, grinding. A year later, we finally make new highs. It's not going to be fast. So don't, again, I could be wrong, but this is just a tendency that I've noticed over time. So, in maybe another 6 months, we'll finally knock out new highs, and then it'll continue to grind in new highs because people just don't believe it. I don't know. I don't know why Cintas is this high anyway. Of course, the only negative is this is when we had the split, and then poof, down we go. Public bait and switch. But you never buy the split. I think you buy the break. Well, this one happened to be magnified. All right, hang on a second. I'm going to set up IBM. This is my sample of my rules, right? Again, I keep it simple, stupid, right? That KISS method. These are all the rules I have for trading out of the money options. Must have a bull trap. Again, I always talk about the traps, or a bear trap, depending on which side you're going with. Must have time in conjunction with the trap. So you need a twofer. You need a big bar on the stock chart with high volume. And then on the option part, I usually use a 2-hour option chart and buy options once new highs are achieved in that 2-hour chart. Calls or puts, right, depending on which direction. Strike is set above at the big bar high for calls and the big bar low for puts. Use long options that are at least 2 weeks out in time on a monthly, not a weekly, but I use a monthly time frame. So it'll be at least 2 weeks, probably 3 or 4, just depends. Again, I don't like to get too close just in case it's a dud. Okay, back to the chart. You can see that this was definitely a trap, a bear trap. Let me pull up the, this is my StockMatrix chart, and you can see this correction was bearish, right, on a shorter term basis. But again, the stops are way down here. They were here, same price. Again, I just moved them since this time period is closed out. So again, I wasn't too concerned about buying this break as long as it didn't take out 246.29, right? That's where my first initiative thought came from. Again, because maybe I missed the trade on the buy, because again, I bought it here and we had this huge gap up. So if you didn't buy it when I bought it or sooner, you miss this gap. So let me now go back to the daily chart. So we knew as this market was breaking and it made that initial trap, it caught my alarm. And let me go to a 130-minute chart. Why do I use a 130-minute chart? Well, because it's 390 minutes on a day basis on the stocks. Divided by 3 is 130 minutes. So I have each day consists of 3 bars on this 130-minute chart. So it kind of breaks down your daily, right? So here is that area of support, and then we took it out, right? So once we took that out, I waited until this market popped back above that, right? Now my options, I actually did this trade, so I'm giving it to you a little late. Okay, let's look at bar chart and these actual options. Again, I just typed IBM in the search, pulled it up. We're going to go to the option pricing on IBM, and you're going to see that the next monthly is March 21st, and the when I did it, the 255 was out of the money. So let's look at the option chart again, following my rules I just showed you, right? One strike, the biggest bar, and again you can see that I bought it once we broke above this. So I think I paid again. I waited for, like in my instructions, right? I waited for, this is a 2-hour chart. Again, you can see it right here, 2-hour chart. So again, I waited for it to make a new high, right? That's the problem with any of these. I couldn't have done it, even though I was tempted to. I still try to wait, and then once it made a new high, I bought it at 412. Again, I was watching it. Now you can put stops in, at least through Robinhood on the options. I don't like to do that unless it's necessary, but again, okay. So what do I do then, right? Now I'm long this call. We're picking the bottom. The trend is a long-term trend is up though. Short-term trend is down. We're up against that gap. So, again, that's the whole premise of me trying to find that trade that matches all the criteria that I need. It had to have timing, which we did. That's the second, the backup. We have to have the trap, which we did. So all these are pretty, and anyway, this is even a huge gap, right? So not bearish by any stretch. Somebody got screwed that was short. So you got to assume that the market's friendly. Since it failed here, now again, we won't know much. We got a few days, and Monday will be open, it might go up, I would guess, and try to poke this high out again where the stops are run. I don't worry about that. What I do personally is when it's in the direction of the trend, I try to make 100%. If it's opposite the trend, I try to make 50%. So if the trend happened to be down and I'm fighting the trend, I don't make as much. Now you're going to lose on a few of these, and if I go down, I think I paid 412 for it, I believe. So again, I'll lose 412 bucks at the worst. Now usually what I do is if after 3-4 days, it's not one of my official rules, but after 3 or 4 days, if I'm not profitable, I'll probably get out, take the loss, break even, whatever it is, because I expect on these traps to be correct fast, right? Like this one. Again, I just happen to have this up. You can see we had a trap here, and poof, immediately went down. Again, this is a 3-hour or 130-minute chart, right? So if in one day you knew you were right by buying puts here, definitely if you're going to fight the trends like this one would have been, options only, right? If you've got enough money to trade stocks, still trade the options. It doesn't make any difference to me. It's about the risk factor, right? Here's another, a bull trap, right, that the market had, took out this high and immediately caved in. So again, I would have bought puts in here on this, and then I would have made money right away. Now I would have only tried to make 50% on whatever I paid. So again, you're out of the money. And again, let's just go and give that a real example. Here's that high. So I would have bought out of the money options at least down here, like 230 puts probably. So again, because again, I take this bar, the previous one or whichever one happens to be, this one was the high, so close enough. I would have taken it down here and bought some out of the money puts down here. Now some of these can be very big bars. So in that case, then you definitely, I'm just going through the chart, see if I can find it. Here's another one, Procter & Gamble. Had this all-time high. I like all-time highs. It doesn't have to be all-time highs, but I like that because that's definitely fuel for the fire. And you can see that this market popped it hard and then caved in. So I would have been looking at all the money options down here at around the 175, whatever the strike happens to be that I can get. And then it finally collapsed, right? So again, you can see that the collapse worked. We had timing. So again, it met all my criteria to do a fade trade. Again, I would have just made 50%, which I would have made probably in the first day, maybe the second, right? Which is fine. Again, I'm not trying to be a hero. I'm a trading it, right? I'm a trader. Again, but we had a bear trap down here, right? After that bull trap, we had a bear trap, and again, similar situation. I would have, bought calls at around the 160, 250, or whatever they got, right? 163 strikes, and I would have bought that to trade for the upside. So again, these traps come along quite a bit, especially in these volatile markets. Now here was one, but it never had the big volume push, never had the poke. Now these you might have traded, right, on just JPM. But again, it just never had the setup. We definitely might have done this one since we had timing, and maybe this one too. But again, I'm just trading for 50% out of the money. I like to see the bigger action like these get me more excited, or like this high maybe because it had a bigger poke, and I would have been buying out of the money puts down here, right? So again, they're a lot cheaper. I paid 400 bucks for something that would normally cost you, if you waited, right, it'd cost you 1,200. Here's Coinbase, again, another bull trap. Again, this is a daily charts now, but you can see that we had the bull trap twice, right? This one, which had to break, and we probably would have traded out of it because we're fighting the trend. I'm only trying to make 50%. Popped up again, and it broke again. I'm assuming I would have probably got filled. If not, we'd have lost. Or we'd had enough time that we held on, and then there was another one, and it broke, and probably would have got out right away because we're fighting the trend. I'm only trying to make 50%, right? Simple rule. We had actually a nice inside bull trap, I call it. It made a new high. The trend is down long term, poked up, and then poof, we had several in here. So that was the only one that I would have probably traded. If I had some timing to back that up, I would have taken that. Let me see. Now, here's Cintas. Of course, it had a bull trap on those numbers, and that would have definitely worked. Here's the S&P for futures guys. They like to trade futures. A similar situation. Inside bull trap. We had it, took it out, poof. I would have probably bought some puts down in here on the S&P. Here's the Dow chart. It did not have a trap. This one maybe by a tick or two. Let me see, 456.35, 456.42, a perfect one. So I'd have bought out of the money puts here. Again, if there's timing to back that up, I would have taken that. And once we did the trap here, then we had a trap here. So the bull trap turned into a bear trap. Again, similar situation. I would have been buying calls up in here, out of the money calls with a time horizon that we look at least 2 weeks into the monthly, and don't trade the weeklies. Here's the QQQ, had a bull trap for sure. Took out the highs. Again, I would have buying out of the money. I think I actually took this trade and made money pretty quickly on this one as well. I think I got out right here. So again, this is simple stuff, right? I put orders in though. I don't wait around. I put good till cancel orders. Let's go to a whole different market. Let's go to like corn. Here's your futures in corn. You can see it ground higher, but these bull traps you would have made money on probably, right? This was went up, made new highs, but it never had any activity to get you in. This one was tricky. Here's the soybeans. Definitely had a bull trap, right? An inside bull trap, again, what I call it. We had one here, one here, one here. So again, it's, just how it is. Here's the wheat. Did not have any traps to speak of. We did have several bear traps, right? One here would have made money. Again, because I'm fighting the train, I'm only trying to make 50%. Again, another one here, which definitely would have worked, and that would have been it on these. So again, I'm just kind of going through. Coffee was a straight up monster, and you can see we're getting near support here, and timing as well. So, but no traps to speak of. Again, traps are just, to me, one alternative that you can trade. They work. That's all I can tell you. Again, because where does people getting stopped out, right? Here's one on crude oil. A couple of them actually. We had a trap here that finally broke, and either one of them would have been okay. Even if you got in here early, you would have been at a loss. Because, oh crap, I'm gonna lose my $500 or whatever, 200, 500, 800, whatever it cost you, right? You said, oh, I lost that for sure, and then poof, down she went. So even if you did this one and got in too early, if the options showed you, you still were fine. You just had a double trap, and then another one here, an inside trap. So again, I like that. This one was also a trap. So again, you can see that they occur, right? It's not. It's just because that's where people are making or losing money, right? That's where the stops are. Gold had one, popped up, poof, took it out, and the rewards would have been good, but quick. Now you'd have been only trying to make 50% on your option. So if you spent $1,000 on a gold put, you'd only try to make an extra $500 or a total of $1,500. So
refresh finished.
And here's Bitcoin, right? Similar situation. We had a pop up, made new highs, poof, ended up making money pretty quickly. So again, I would have been trying to make 50% on that. The ones that are in the trends are a little nicer because you're not fearing the market. You might have traded this one, kind of a trap, took out all this congestion, popped it out. You'd have been much more comfortable being a little more bullish. Meal. Again, I just thumbed through some charts just so you understand. It's just not the commods or the stocks. You can trade spreads the same way. Actually, those traps occur all the time in all the places on the market. So, all right, I just wanted to share that with you. That's how I trade the market. It's simple. If trading now, if you're long-term investing, the StockMatrix program is perfect. I almost, in quotes, almost guarantee on the long term you'll make money on it because you're using the same rules similar to the top picking method that I just showed you with the options, or the bull or bear trap method, I guess you call it. It's a simple method, but so is the StockMatrix. You're going with the direction of the trend. If it gets above a certain level, you're buying calls. You're hanging on until it tells you to get out. It's simple. Or puts. All right. Thank you. You guys have a great next week.